having the ability to not have to pay that sum of money for over a year, and having the ability to leave low-paying jobs because they were unemployed, or having time to complete a degree or get a higher-paying job. All of those things absolutely had a greater effect on that population that tends to rent versus that population that owns a home. So those were significant opportunities to save and restart compared to the trends and opportunities we had before the pandemic. And also they found that credit scores among renters with student debt increased since they paused the student loan payments. So instead of paying student loans, people were putting that money towards other debts. And if you think about how much on average a student loan payment can be, that type of savings should have made a difference when a person has multiple other bills. So all that really tells us is that any and every change in our environment, our political environment and legislation, has a chance of affecting our finances in either direction. So we need to be aware of changes in policy that occur, because that's going to help us make better financial plans. And secondly, I wanted to highlight a poll that was taken by the Pew Institute of Research, where they asked people within the non-retiree age population how they feel the pandemic will affect their ability to achieve their financial goals. So for lower to middle class income people in the long run, they think that the pandemic will make it somewhat harder to achieve their financial goals, while upper income levels feel indifferent about it. But for everyone, compared to a year ago or prior to the pandemic, most people said their financial situation is worse now than before. And I've noticed people do have a habit of thinking they are doing terrible, but when in reality, they're actually in a pretty good position, or they're capable of making changes to improve. So trying to keep a positive mindset, especially after everything we just experienced in the last year, is probably the most difficult thing to do. But I do want you to believe that you're able to be financially successful with the proper knowledge and preparation. You could definitely have a healthy financial future. So again, any changes in policy and legislation has a chance of affecting your finances in either direction. So just be aware of changes in policy that occur, so that way you can properly plan. So now I'll pass it on to La Michelle, who's going to go over a handful of some of those changes that happened in the last year. And if anyone has any questions, feel free to leave a comment.
All right. Hello, everyone. I'm La Michelle. I'm going to start off by going over tax changes and things to look at for the pandemic. If you can go to the next slide. Okay, thank you. So a few of the tax changes and a few other things I'll be discussing is the Family First Coronavirus Response Act, American Rescue Plan Act, and the CARE Act 2020. And I'll highlight some things that changed that are no longer effective that happened in 2020 to 2021, and some things they are continuing. Okay, so one big change from last year to this year is that in 2020, if you received unemployment, you were able to, the first 10,200 if you were single, married, filing separate, or 20,400 if you were married, filing joint, was not taxable at all. But for 2021, all unemployment is taxable. So that is something they did take away. And but on the other end, something good that we have this year is that in the past, before 2020, because it's also what's taking place in 2020, you can only deduct charitable deductions as part of your itemized deductions. But now this year, you'll be able to deduct charity, whether you do itemized deduction or not. And just a quick little background, itemized deduction, so they have the itemized and standard. So a standard deduction is just a straight deduction you get no matter what, no matter who you are. And then an itemized deduction is, you know, if you have a mortgage, if you do charity, and a few other things, and they add up all the different things together. And then you get to take the highest of the two, whichever one would work for you best. So in the past, for charity, you could only deduct it if you were taking an itemized deduction, which a lot of people don't take, especially since the new tax overhaul came and the standard deduction has become so high that I've even seen people with mortgage, charities, et cetera, not even be able to take the itemized deduction anymore. So now charity is above the line. So if in 2020, you can only deduct up to $300 per tax return, but for 2021, you could do up to $600 if you're married filing jointly. So instead of it being $300 per tax return, now it's $300 per person. So really, if you're doing a married filing joint return, the benefit doubled. Okay, so there have also been some big changes with student loans. So one big thing is, in the past, if your student loans were forgiven, you would have to pay taxes on that amount because that would be considered income. But now, up until 2026, if your student loans are forgiven, you will not have to pay any taxes on that. So if you want to get your student loans forgiven, now is a great time to go ahead and do that. And that segues right into the public service forgiveness. As many of you may know, in the past, if you worked in various jobs, nonprofit, state, federal, local governments, U.S. military, et cetera, you could potentially get your loans dismissed if you worked for 10 years. But the problem with that is that you would have to jump through all kind of hoops and things. And even though a lot of people applied for it, the majority, the overwhelming amount of people didn't receive that forgiveness. But now through October 2022, they have currently passed something where if you worked for a nonprofit for 10 years, the federal government, the state government, the local government, U.S. military, and you know, if you potentially got rejected in the past, I would say go ahead and put in to get it, because the way it used to be is you would have had to have enrolled in a program for the 10 years before you even started your 10-year payments and other things you had to do throughout the 10 years. But now if you have those 10 years worth of payments, you can go in and submit for that and get your student loan debt forgiven. And you have till October 2022. Now you never know, they may continue it, but they may not. And now is a great time because you can get that forgiven and not have to pay taxes on that forgiveness amount. And as of right now, the last thing I want to say about student loans is that they're doing a payment pause up until January 31st, 2022. Now, they've extended it a couple times, so they may extend it again, but as of right now, up until January 31st, 2022, you don't have to pay your student loan debt, and it won't be accruing interest if it's with the federal government. Remember that. So if you have student loan debt, you know, with a private institution, a bank, those you still have to pay. It's just once to the federal government. Okay, so the next thing I wanted to talk about is retirement plans. So there have been a few changes for that. So in the past, for the retirement minimum distribution age, you had to be 70 and a half. And what that meant is if you, once you hit that age, you had to take a certain amount out of your retirement or you would receive penalties. But now they upped the age to 72. So if you made 72 in 2020, I mean, if you made 70 and a half in 2020, you wouldn't have had to have taken it. You could have waited until you were 72 since that was the new age. And another thing I wanted to mention was IRA contributions. There's no change in the amount from 2020 to 2021, but that is a great way to have tax savings because if you put money into an IRA, you could deduct that on your tax return. Of course, you cannot do that with a Roth IRA. It has to be a non-Roth IRA. And if you do that, you know, you can put away, you know, up to 6,000 for single filers, you know, once for salaries up to 76,000, and you could do up to 12,000 for couples. And then that income is up to people who make 125,000. And of course they have the catch-up provisions. So you get additional $1,000 for people over 50. So for single filers, if you're over 50, you can defer $7,000 into an IRA. And if you're married, you can do up to $14,000. into an IRA. But one thing you have to remember when you put money into an IRA, certain types of income cannot be used for the deduction. So you can't use money from child support. You can't use income from a rental property, interest and dividends from investments, pay you received from being an inmate in an institution, other retirement income, Social Security, unemployment benefits. So if any of those things are your only source of income, you cannot take the IRA deduction. It has to be income you earned from, if you have a business, from your 1099 from your business, or if you're a consultant, sole proprietor, or money you received through a W-2. Okay, and a couple other things you can use to help save money on taxes and things is FSA, which is a flexible spending account, which most employers do offer. So one thing is that changed about the FSA is that in the past, you had to use it or you lose it. But for 2020 into 2021 and 2021 into 2022, anything you didn't use by the end of the year, you can roll over and use for the next year, which I know even I have made, a few years ago, I even made the mistake of not using all my FSA funds by the end of the year. So now if you don't use them, you'll be able to roll them over. And the FSA is a great way to, defer taxes and put some money away to go towards your healthcare costs, towards dependent care costs, whether it's babysitters, summer camps, et cetera, to save on your tax burden.
We do have a question.
Oh, yeah.
Can you still receive the credit for up to $100,000 if you live outside of the United States?
Which credit?
Yeah. This question was from F Office Account.
Is this the credit for withdrawing your retirement funds early?
Or the first 100,000 is tax-free if you're working outside of the U.S.
Oh, yes, but I'm not exactly sure the exact number. I'm not sure if the number is still 100,000. Honestly, off the top of my head, I may have to look that up and research it.
Okay. All right.
Okay, yeah, I didn't know if you were talking about, because I know in 2020 they had this thing where if you withdrew money from your retirement account, you wouldn't have to pay the penalty if it was up to 100,000. That's why I didn't know what you were referring to, but that was something from 2020.
Great. Thank you.
Okay, continuing about the FSA, some people don't know what type of qualifying items you can even use FSA funds on. So like Michelle said, all you have to do to get an FSA is work for an employer who offers one, and most employers do. It's also open season right now at most places, so definitely check into your benefit packages and see. But from the CARES Act, they now allow us to use FSA dollars on products like over-the-counter cold and flu medicine, pain reliever, fever reducer, cough drops, menstrual products, lotions, creams, and face wash. So if you think about how much you spend on those types of products a year, you could be giving yourself a discount with those as well if you use FSA money instead of your own cash. And if you check out online stores like FSAstore.com, Walgreens or CVS, and even Amazon, they have a dedicated section just for FSA spending. And I know with my last employer, they actually matched me up to $200 that I put in my FSA. So that would have been great this past year because I spent a lot of money on those types of products. Other changes, the Rescue Plan Act, the IRS did allow some employers to receive tax credits for allowing employees to take paid leave time to get the vaccine and paid leave time with anything associated with the vaccine or if you got COVID. So that was through the end of last month. So if you did happen to take leave during this past year for those reasons I just mentioned, and it was unpaid, make sure you ask your employer about getting paid leave for that time, especially if it's a smaller employer, just in case, because some of these changes have been overnight. So you definitely want to make sure that your employer is up to date as well. You don't want to have to work, not get paid for not working because of something that you didn't cause, COVID. Another thing that was updated, some updates we've seen for retirement match. So in bids to retain workers, we're seeing a lot of firms upping the retirement match, which is always good to take advantage of. And I know a lot of people are in the middle of switching jobs. That's a good benefit to ask about and negotiate on the retirement matches. And some employers are also offering sponsored education benefits. So like we just saw Amazon announce that they would pay for certificate programs and degrees to help employees pursue higher paying careers. They're also giving home office equipment stipends. They're paying for you to work from home. So it's really important that you're in touch with your employer and the benefits offices to see what changes they have that you can take advantage of. Okay, so moving on to what do we do going forward into 2022? So right now is a great time to start formulating a budget and start creating new money habits. So we have 2 months left in this year, and it's a good idea to figure out what our money habits have been in the last year and a half and what our financial goals should be based on our current circumstances. So you should have a general idea of how much you earn per month and how much you spend per month. There's apps like Mint, NerdWallet, even your own personal banking app on your phone. I know mine does. It will tell me and give me a list of everything I spend my monthly income on and categorize it. So once you know what your habits are, you can start considering the type of things that are in your control. So things that are in your control tend to be variable expenses, like let's say subscription payments to Netflix and Amazon, entertainment and eating out. Those are things that you can control. Things that are not really in your control per se are more like the fixed costs, like your mortgage or your rent, taxes, insurance, student loan payments. But being able to identify what type of expense is necessary versus unnecessary will help you plan a solid budget. So, and that's really up to you to decide because everyone is different. But you just got to be honest with yourself when you're assessing what's necessary. So if we're in a tight situation, we have to think about money as a strategic tool. We can't use it emotionally. And I'm going to jump to the next slide because I want to show you this screenshot on the left of the Maslow's hierarchy of needs. Not sure if anyone's seen this before, but it's a good tool to reference when you're trying to decide what type of expenditure is needed versus what's a luxury. So putting money towards categories on the bottom of the pyramid are typically necessary expenses. Like, for example, the second highest need, the safety needs. I think everyone will agree that after this past year, maybe having a good savings or an emergency fund should have been part of our financial strategy. So maybe this coming year, instead of being emotional with our money, we should think more strategically and put each dollar towards a purpose that fulfills a category on one of these bottom lines here. Some long-term goals that you can consider are like saving for retirement, saving to take a work sabbatical, or paying down a student loan debt. Short-term goals, those could be like paying down a debt in 9 months or saving to pay for holiday gifts. So the wants, the unnecessary things may be something you plan for on the short term. Also, when you are thinking about what your goals are going to be next year, make sure they're SMART goals. So a goal should be specific, it should be measurable, achievable, relevant, and time sensitive. So think about what it is that you want, how much it will cost you, and when you want to make that purchase. So then break down the cost into manageable monthly chunks, and that's how you develop an actionable plan to reach your goal. Even think about increasing your income. Like right now is a really great time to increase your income by taking a seasonal job during your off hours. Maybe you could challenge yourself to work 10 additional hours a week for the next 2 months. And you could use those funds to go towards any short-term goal you come up with. Also, a common rule that's used for budgeting, you most likely have heard before, is the 50-30-20 rule, where 50% of your income is spent on necessities. 30% would be spent on discretionary or variable expenses. And then 20% of your income would go to savings or debt repayment. And I do have a worksheet that if we were meeting in person, I would have handed out. And basically, one sheet has all the common income and expense categories. If you don't have an app with your banking app that does it for you, you can use that worksheet as a guide. And it kind of helps you lay out how much you're spending on those categories. And I also had a worksheet that helps you write out your SMART goals. But I can share that with you guys at the end if you want to take a look at it. And again, take advantage of any perks because they absolutely can have a positive effect on your finances. So I'll pass it back to La Michelle for some last minute year-end tips.
Hi, before I jump into any last minute year-end tips, I actually went ahead and looked it up for the foreign. So it's not $100,000 to exempt for income. The amount for 2021 is $108,700. Just as a FYI for the person asking about the $100,000, it usually increases every year, and it increased to 108 for 2021. Okay, so to go back to some last minute things, one thing you want to do is make sure you have good withholdings on your W-4 and you're not underholding. The downside about the IRS and taxes is that, you know, if you underpay, you're gonna get a penalty. And the thing is, they don't just assess the penalty annually, they assess the penalty on a quarterly basis. So if you underpaid, they break it out and assume you underpaid every single quarter and do penalties that way. But if you make sure you're caught up by the end of the year, you know, the W-2, the employee that the IRS receives is the same one you receive. So it doesn't say which months you did which things. So, you know, if you know you're usually a little under what you're supposed to pay, maybe before the year is over, you know, check your W-4 or update it so you won't have to have those additional penalties. And another thing, another last minute tip is you can, you know, of course, to the best of your ability, max out your 401k or 403b. And as you know, for a 401k, and well, as you may know, 401k and 403b is a retirement plan offered by your company. Of course, it's not the same as a pension because with a 401k and 403b, you have to contribute money in there in order for it to be a part of your retirement. But in a lot of cases, the employer matches. And the big difference between a 401k and a 403b is a 403b is for any nonprofit organizations and a 401k is for for-profit organizations. And they have it now where you can defer, this is per person, not per return. You can defer up to $19,500 per year. And if you're 50 or older, you can contribute up to $26,000 per year. And even if you don't have, you know, the 19,500 or 26,000 to defer, which many people don't, even just trying to at minimum putting into your 401k what your employer matches. So if your employer matches 3% and minimum putting in 3% could make a huge difference and not leave money on the table as well. Another thing you could do, as I mentioned earlier, is put money into your IRA. And the good thing is you have until the end of tax season to fund the IRA for the prior year. And the next thing is selling low performing stock. So if during 2021, throughout the year, you've traded some stock or cryptocurrency and you know you're going to have large capital gains, a good way to offset some of those large capital gains is to potentially, towards the end of the year, see which stock are having losses, and maybe you could sell those stock to offset some of your tax burden. And the last thing I wanted to mention as like a last minute tip is fund a 529. A 529 is a plan. It's administered and run similar to an IRA and a 401k, where when you put your money in there, based off your risk, they put it in different kind of stocks and bonds, etc. But a 529 is for education. And a 529, you can only get the deduction for the state. So for your federal return, you cannot get a deduction. And every state is different. Some states allow it, some don't. But I know for a fact Illinois allows it. And you can put away up to $10,000 for individuals and up to $20,000 for a married filing joint return. And a lot of times with the money from the 529, when you withdraw it, you don't have to pay taxes on the capital gains or the interest received from that if you spend it on qualifying expenses. So tuition for a high school, tuition for college, books, etc.
Okay, and I also wanted to mention about the W-4s. If anyone is working more than one job, you definitely want to take a look at your withholdings, because if you didn't look at the last page of the W-4 where they have a chart to help you figure out based on how much the lower paying job is versus the higher paying job is. If you didn't actually write in the amount of money you should withhold, you're probably going to owe next year. So definitely take a look at what you're withholding and make sure that it's correct. And I'm going to see if I could share the worksheet that I have. So this first worksheet, this is what I was talking about, the SMART planning worksheet. So you could write out your goals here and estimate the cost, the date to reach, and what your plan is going to be to reach those goals, and then how much per month you're going to dedicate towards that goal. And whether it's going to be a short-term goal to a long-term goal. So if anybody wants this, I'd be happy to email it to you. And also, this is the budget worksheet. So like I said, it gives you the categories that are common, and you could write the dollar amounts here. Some other expenses that I didn't mention that you may have, just write them down and come up with a percentage. And then you can figure out if you're going to be short or you're going to have extra and what you're going to do with that. So here is our contact information. So this is my personal email address. You can also look me up on LinkedIn. And here's LaMichelle's info and her business phone number. I don't know if you want to talk about any type of services you offer.
Sure, I can mention that. So I own a small virtual accounting firm. Some clients do want to meet in person, so I'm usually open to meet people, of course, in the Chicagoland area. I actually live in Lake County, so I'm located up north, but the services I offer is I do individual taxes. I do taxes for small businesses. I do accounting, bookkeeping, and I also help with tax planning as well, and other consulting services to meet your business needs. For example, if you want to start a business, what type of legal structure you should have versus an LLC versus a corporation. I offer a wide variety of services.
Thank you guys so much for the presentation. Yosha, if you wanted to send me the worksheet, I will be happy to include that with the post-event survey that I'm sending out to attendees.
Okay, great. I'll do that.
All right. If there are no more questions, I would like to formally thank our two wonderful speakers and everyone else for attending. On behalf of the Black Alumni Chapter, we try to bring you events that are super duper relevant. And if anyone is interested in joining the chapter, we are always looking for members. Our application will open back up next year. So you can email our fearless leader, April. But again, thank you so very much, and be on the lookout for more events. Particularly, we have an event coming up in Black History Month. Thank you.